All right, testing. 1, 2, 3, testing 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in Japan. Good morning, guten Morgen, Jumbo, ni hao ma. Good to see you, everybody. Hey, let me shut the door to the office. Hang on. Un momento, por favor. Muy bien. All right. So without further ado, welcome to Forex.Today. Let's get on with it. Boom. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay. So, guten Morgen. My name is Wayne McDonald. I am a currency trader. I wanted to be an astronaut. I was Top Gun qualified. I was selected by the Navy to be a pilot. They gave me an 8-year program. And I thought after that, after my 8 years, I could continue my work at NASA, since I had worked at NASA for 2 summers. And then I would become an astronaut. And boy, what a good time it'd be now, huh? With people actually going to space. Just for vacation, boy, there'd be lots of demand for astronauts, right? I'd probably be training the young guns. But anyways, turns out I'm diabetic, so I'm like, yeah, I'll just be a successful businessman. Isn't that cool? So I started in the nonprofit organization, or in the nonprofit world, managed a nonprofit of 3,000 people across the United States. On the board of directors with me was the former president of AT&T, the vice president for Arthur Andersen, a representative of the United Nations. I think we had a vice president of General Electric, and someone called George Soros, known as the guy who broke the Bank of England. And so George Soros put his arm around me and he said, son, you should become a foreign exchange trader. No, wouldn't that be great, though? Everything else was true. Wouldn't that be great? I got one word for you, son. Foreign exchange. I'm like, but wait. Well, in Swiss German, it's only one word. But anyways. So anyways, I went to the Silicon Valley because that's what was going on in the early 90s, and I became a high-tech startup entrepreneur, moved my way into venture capital, and then one day, was reading an article, and it said the foreign exchange market is $2 trillion a day. And I said, shut the back door. That's not possible. 2 trillion. I'm looking around. I remember it was by myself in my office, but I'm reading Architectural Digest. It was actually funny. This is how I came across Forex. Architectural Digest. And I'm like, $2 trillion a day? That can't be true, could it? Really? Like $2 trillion a day? Seriously? So I look in and I'm like, oh my God. Oh my God. 2 trillion a day. I'm like, I don't know what this foreign exchange thing is. Looks like it's very inefficient because it used to be a bunch of old white guys at the top of their banks smoking cigars and laughing at regular people. I'm like, now that it's open up to retail traders, I want to become an old white guy smoking cigars, laughing at regular people. And here I am, 20 years later. So there's my journey. Nice to meet you. So pull up a chair. Let's hang out, bro. This is the worst trading week of the year. This is the worst time for you to try to get rich quick because it ain't going to happen, bro. But I am here to be on this journey with you. And in fact, you are on this journey with me, depending on the situation. Ask questions, get involved, and I'll share my experience. Even if it's a slow day, let's have some fun. Maybe it's a good day. I don't know. But expectations need to match reality. So you and I are here to hang out. I'm bribing you with education. The cost of this education is you visiting tradersway.com, opening up a demo account. Simple, right? That's it. There's no cost of money, right? It's not like you have to do stuff like this and waste your money. No, but there is a cost. And the cost is you have to visit tradersway.com and open up a demo account. Yeah, what is that? 30 seconds of your time? Maybe less. So, tradersway.com, fast execution speed, narrow spreads, wide swaps, world-class customer service, and above-average looking employees. Mr. Kennedy says, Soros is a bad dude. I don't think you understand, but I understand how you could think that. Honestly, here's my 2 seconds on Soros. You think he's a bad dude. I think Warren Buffett is an a-hole. But George Soros is misunderstood, and I can see from the point of view where that could be the case. But honestly, he believes capitalism is the best system out there. But as we develop this thing we call capitalism, because it's still a fairly new social experiment of the last, less than 200 years? Right? So less than 200 years, 150 years, even just the last 100 years, capitalism has spread across the world. Okay? So let's just say 50 to 100 years, capitalism is developing. So imagine Soros being a young man 30, 40 years ago. It was in its infancy, and socialism was a real plausibility. You're either going to be a capitalist pig dog or a socialist pig dog. Okay? So put yourself in that situation. You have to be in that frame of mind. Society hadn't picked a model yet. Socialism versus capitalism. Okay? Great. I'm not talking about democracy, by the way. That's a whole different thing. That's democracy versus communism. I'm not talking about that. I'm talking about a social structure. Capitalism, right, versus socialism. And so he chose capitalism, but he knew it was flawed. You have to understand that. Nuno says he has some humanitarian projects in Africa. That doesn't make you a good guy or a bad guy. Even bad guys do that, okay? But anyways, let's get back to the point. It wasn't known, we hadn't figured out what was the better model. Soros had picked capitalism, but he knew it wasn't perfect, that there were definitely flaws. And if he could do things in the financial markets to highlight the flaws, things like break the Bank of England, then the flaws would be fixed. Okay, you see what I mean? And we, of course, now perhaps partly of what he did, I don't know, that might be overstatement, but 50, 60 years later, we do know capitalism is by far the superior social organization. It's the most human. Socialism is dehumanizing. Okay? For example, look at the art, socialist art. Does that scream happy humanity? Okay. Mr. Kennedy says, oh, but he bankrupted Thailand. No, Thailand bankrupted Thailand. Okay. Anyways, let's go. Wait, it says no data? Excellent connection. Weird. All right. So let us go through the currency pairs, and we can look at gold and oil, Bitcoin, dollar pairs, yen pairs. How does that smell? What do you think, huh? Let's go. I've been around the world and I see dollar strength and Japanese yen strength. That is the trend. It has been the trend. Notice this period here is when there was no traders in the market and then, traders returning the market. Once again, I still believe, I don't know if I'm right, but I still believe this is traders leaving the market or it's day trading, which is fine. Okay. Yeah, Cash, that's really interesting, huh? Yeah, we can take a look at that. Okay. So Aussies come off, Euros come off, pound was strong, but not. Kiwi neutral, but that's been doing this all year, huh? Strong week, strong week. Swissy all over the place. So I hope you go through your charts and say, well, you could buy some yen and buy some dollar, but even then it's right. And that's about that. That's that. There's not a lot going on, nor does there need to be a lot going on. Okay. Make sure you're not over trading. What is your thesis? What did I say yesterday? I said, I don't even think I'm neutral yet, but I believe I will become neutral. Right now, I'm bearish. Okay. On the long run, I'm bullish, but I look at the market conditions and I'm like, well, everything about this is bearish. I want to become bullish, but I don't think it'll happen until middle of August. So meanwhile, then what I'm setting up ultimately is going to be sideways, right? But I said yesterday, I'm not entirely sure we're there yet. What? Yeah, Mr. Ketty says, hey, I don't mean to get off target with Soros. Yeah, but it's an interesting convo for sure. Okay. But at least he and I are in the same annual report. Okay. That's what I was doing in 1995. Okay. So, is this becoming neutral? Yeah, but I think what you'll find is this is the only one. And remember, we're also looking for congruency, meaning I want all pairs to go neutral. And this might be the beginning. This might be neutrality. Okay. If you recall yesterday, I set this up with a 618 Fibonacci retracement. The idea is if you're a bull, this will be bearish. This would be the buy zone. You guys remember all that? And I think yesterday we had just started this downward process. So this is interesting, right? And that's what we were trying to predict. Okay? That you don't, if you recall, I think we were talking about buyers buying below price and bears selling above price, right? You guys remember it that way? And I said, then, therefore, it'd be silly to buy here because you'd be the only one. You guys following me? Okay, yeah. So this is what happens. You get this retracement down, and what happens there? That's where buyers want to buy, not bears. See, where I think amateur retail traders lose their money is they see that it's fallen, so it must be bearish. Wrong. If you're a bear, you sell high. If you're a bull, you buy low. So now, right? an amateur would be selling because it fell all day. Well, gives a crap about that, okay? A bull buys it low and is thinking this. Now, I'm not convinced we're going to get that, and I think you're going to be lucky to get this, but nonetheless, it's the idea that I'm trying to get across. And by the way, are you super aggressive when you're the only one trading? Man, am I relaxed this week. Oh, hey, I want to ask you, my live swing trading groups have time today to do a macro class. I think it's good enough. I want some tweaks to be made between now and 2 p.m., but it'll be on financial markets. Yep. We can knock that out if you're going to be around. Normally I do it on Tuesdays, but you know, hey, life got in the way. What can I say? So I think the way it's going to work, it's going to be this class and then 2 more. So we're getting probably, I think by the time I'm done, it's going to be a 24-hour class. That's okay, Junkie. Imagine that. Like, that's almost good marketing, right? Learn macroeconomics in 24 hours. Cool. Right on, Meta. Yeah, so the typical 2 p.m. I'll send out an email as well. Cool. Yeah, I couldn't do it yesterday. I had a paper due on systematic investing. Okay, so we look here and we can see we do not have congruency with the Great British Pound, which means the pound is stronger than the euro. Okay? I have all these gray boxes, as you see, right? What do they represent? Well, these are old levels of resistance, and they're telling me this market is still not bullish. Okay? One of the things I highlighted for you yesterday was the idea that, you know, 55's in control, the 55's in control, the 55's in control, and we were here. In a bearish market, what do you do there? Buy it, or would you sell it? Will you have it in the war room once you're done teaching it? There are recordings. I will pull them down, and I'm going to redo the whole class in August. Okay. Okay. Now, if you look at it this way, it makes sense. Anybody think we're going to 117? I have 117.11 and a half. But maybe 117-ish. What do you stink? Okay. $1.17. Where did that go? Okay. Could very much happen. This one is much different. Okay. You can see it's trying to form a base. Okay. We're going to be challenged here. And we're halfway, so we don't really know. So my charts, you might be able to see, have it trending like this on the short run and trending this way on the long run. And do you think it matters? And then, of course, look at this one. Okay, which means there's one like this. So let's start with this. What do you think it means that there's a slightly bullish long-term trend? Okay, a bearish medium-term trend. Okay, and a short-term bullish trend. What do you think it means? Well, if we're going to resume the long-term trend, we have to turn the medium, and therefore the short term is going to have to do a higher high, higher low, higher high. So even though this is bullish, in the moment, in of itself, it doesn't really mean anything, except we are kicking off the psych level of 170. You see that? .70, I should say. So probably need something like this. And even then, I'm not certain of that. So you need a trend, right? This small time frame needs to start trending. Do you see it? I'll do it in gray. You see, there's one here. Okay. So then you'd need one down like this, and then a new one this way. Whoop. And that just gets you to here. Remember, psychologically, I say to myself, well, it could go up there, but I doubt that it'll break. Why? Because I think a bear would sell that. Okay? Some of you guys say sideways, but don't you also have to play the support if you're a bull? So there's a way to trade sideways range-bound markets, isn't there? Buy its support. It's your job, yo. Okay. Okay. So we're in this range. Okay. So what do you think is going to happen? Okay. Nice, right? Okay. This is the day I said, get out of the market, go on summer vacation. Okay. This is us approaching non-farm payrolls. Okay. This is the 1st of July, Canada Day, which is the next big day, right? This day and this day, I said, were going to be the big days of the first half. Okay. You guys remember that? And so since then, we've just tested these areas. So what's ultimately the range? Ultimately, the range of support and resistance is here. Okay. Now there is a psych level, of course, but the bottom is 69. Top is 71. Okay. Pretty simple stuff, right? Well, it's supposed to be simple. Why do you complicate it? It's not even 69, so it's almost like 69 and a half, right? So a bull would interpret this as stepping up. Okay, so that's how a bull is looking at it. 69, 69 and a half, 70. And we're kind of doing this. And a bull would interpret this as go up here, bear's going to sell it, it's going to come down to 70.50, and then we're going to make our high. Probably next week. What do you stink? Okay. Cash says depend on the FOMC meeting minutes. But we already know. We already know. We already know the policies and procedures. Yeah, okay, you should read them. But I don't think the market is sitting around holding back their volatility, right? Holding back their trades because they're waiting for the Fed meeting minutes. No, they're not even in the office. No, these are the ones that people are not going to read. This is the ones that the interns are going to read. But I don't think you're going to see the meeting minutes and say, oh my God, did you read that? Oh, let's put on a huge position. No, they're trying to say, do you want chilled lobster for breakfast or chilled tiger prawns? And I'm like, you know what? I want half and half. And I want the Tabasco and the wasabi and the horseradish on the side and the cocktail sauce on the side. Okay. Okay. Cash wants to know about the bond market, which is a really good question. Let's hit it again. Okay, we've been doing this a lot lately, and I'm essentially telling you to pay attention. Okay? All right. So you used to have $1 billion invested overseas, and you decided to take some trades off because of summer. What do you do with your money? Lock it in a 10-year T-note. Liquid. It's as liquid as you're going to get, and it earns a little more money. Great. That's one explanation. People getting out of trades. Another thing that's been going on is that people thought interest rates were going to rise and the Fed was going to leave the market. So they were, right, selling the bond market. And of course, the Fed said, yeah, we're going to raise interest rates, but not till next year. We're not even going to taper till September, October. You have to understand that some people were wrong, stupid, misinformed, reactive investors. See, the market is not rational. There were idiots back in March and April that were screaming interest rates are going to go out of control. Do you remember this? And I calmed you down. How many people see it that way? I don't know if you agree with that, but how many people see it that way? I remember the media was freaking out about interest rates going up. And I said, look, no. Stay calm. Let's look at what we know. What has the Fed told us, right? In fact, it's one of the reasons I did the macroeconomics course, so I could share with you my point of view of why I think the entire market is wrong and why I'm right. Well, that's kind of arrogant. Well, yeah, I'm a trader. Okay. Does anyone remember it that way, though? I calmed you down and said, let's look at what we know and not listen to what other people think. So now they're realizing, wait, the Fed is still buying $120 billion worth of bonds every month. Oh, well, I guess if I'm shorting against the Fed. There's a rule that Wall Street knows. Never trade against the Fed. Tomas says, hey, they always freak out. Yeah, and it's my job to always not freak out. Right, Gregors? So anyway, the other way of looking at it is people realize maybe the safest, easiest trade is still to front run the Fed. Another way of looking at it is interest rates are not going to go up this year. Now, the yield will go up first, of course, but not interest rates. And the yield is not likely to go up significantly. Like I said, it'll be 2.0 by the end of the year. Let me say it again. This is 1.34. I believe it'll be 2.0 by the end of the year. But now what that means is I understand the mechanism of what would make that happen. This is the 10-year T-note. It's usually not manipulated at all by the Fed, but the Fed is buying some now, which is extraordinary. I believe that extraordinary policy will leave soon. But for now, that's what's happening. And the opposite will need to happen somewhere between today, the 7th of July, and December 31st. Could that be the announcement of a taper and then the actual tapering? Yes. Is it going to happen in July? No, but I already told you that. Okay? So we'll watch this. 10-year T-note should not be at 1.3. Many, many years ago, back probably in 2007, maybe 2008, when yields were falling on the 10-year, they had fallen from 5.5% all the way down to 2.25%. And I did a special webinar for FX boot campers, and I explained using Newtonian physics why the 10-year T-note cannot have a yield less than 2%. Well, not in a normal world anyways. If the Fed steps in, they can drive it down. So the Fed is still involved. Okay. Charlie says, hey, the Fed will have to step in as sellers. Not yet. No, not yet. But the Fed does have a balance sheet of 10-year T-notes. Someday in the future, they may want to sell them. What will happen if the Fed sells? Okay, let's do a quick lesson on monetary policy. I don't know how to label this. Okay. Why is the demand curve sloped down? When interest rates are high, you don't borrow a lot of money. you save a lot of money, but you don't borrow it. Okay? When interest rates, right? So the chart looks like this. So wherever it meets. Okay? So when interest rates are high, you don't borrow very much. And when interest rates are lower, you borrow more. You get that concept? So if interest rates are 2% versus 10%. Okay? All right. So that's the quantity, right? And then we look at supply. Which means if interest rates are 10%, you're very willing to loan your money out. Okay. So anyways, let's talk about the Fed. That's what we're looking at, right? So I have to label this. Fed sells bonds, right? Okay. This is demand and supply, but you also have to understand on the long run. So this is like short run, supply of loanable funds or something like that. And then we're going to call this now long run money supply. The reason for this is there's just that many. That's how much money there is. All right, so the Fed sells bonds. So they have bonds on their balance sheet. You probably hear this a lot. The Fed's balance sheet has expanded to an all-time high, right? Okay, good. Well, let's get some stuff off the balance sheet. So one of the things the Fed owns, U.S. Treasuries. Great. So they sell bonds. What do you buy them with? Cash, by the way, has a side question. Why buy the 10-year T-note at 133 when you can buy the Aussie 10 at 2.19? Make sure you adjust and make those real rates, not nominal rates. Yeah, with dollars. So what happens is the supply of bonds now, the supply of treasuries falls. Okay? But you gave up money, right? So you got to shift this way. Okay? You got to shift, right? And then you shift the money supply. M2. It's not M2, money supply, MS2, okay? MS2. So the money supply has gone away. You gave up money, gave your money to the Fed. The Fed gave you a 10-year T-note. So now there's less money in supply because they just destroy the money. The Fed doesn't spend it. It's no longer in circulation. So money supply has gone down, okay? The supply of 10-year T-notes have gone down. Okay? And interest rates have gone up. Okay? Now, thinking about this, I probably want to end today's lecture on this. So maybe I should be reminded. Because here's the interesting thing. What else could you have done with your money if you didn't have the opportunity to buy a 10-year T-note from the Fed? And you had money to invest. Well, you could have invested into a corporation. And now a U.S. company, because they're competing with the Fed, they have to raise their interest rate even higher. Okay? To say, don't lend the money to the Fed. why buy a 10-year T-note and get 1.3? We'll pay you 2.3. Or if they're a junk bond, we'll pay you 4.3. But the thing is, they're competing with the Fed. Hey, wait, I thought the Fed was trying to help us. I thought the Fed was trying to help the companies. I thought the Fed was trying to help the economy. But now corporations have to pay more to borrow money? Anyways. So I look at this, and this is what I've told you over the years. So pay attention if you've never heard this. Okay? When this is falling, the US dollar is strong. Because the third or fourth thing that could be going on is foreigners are buying these. Okay? So the dollar value of the 10-year T-note goes up, and that drives down interest rates. So if foreigners are buying the 10-year T-note, they're buying the dollar first. It's a dollar trade. Okay? And you'll say, well, why would you buy it at 1.3? No. People were buying this at 2.0. $1.75, right? This is late in the cycle. Okay? Okay? Look at. We were at 3. Then we were at 2. Okay? So I look at this as an inverse to the value of the dollar. So if this is falling, the dollar's getting strong. If this is rising, the dollar's getting weak. Okay? It's not always true, of course. But it is a force to be reckoned with. Okay? You guys see that? When the yield is falling, price is rising. And when price is rising, it's a bullish market. And if foreigners are part of the bulls buying, then they're buying the dollar first. Okay? So here I'd say dollar's weakening. Okay? And here the dollar's strengthening. Okay? Now, to reiterate, I believe by the end of the year, we will be back at 2.0. So I'm going to let it fall. I don't think it'll fall to 1, but it could. Who am I to say otherwise? Okay? But I will be prepared to trade what is likely to be, and I'm not really interested in what's happening now. Okay? That trade is already over, in my opinion. But we might only be halfway to, we just broke 1.5. We sat there for a long time. We might be going from 1.5 to 1.0. The thing is, would you sell the treasury market then? I think you're going to see, let's just pretend this is going to 1.0. That would happen throughout the month of July and throughout the month of August. And about the middle of August, we're tickling 1.0, and everyone's going to be standing around looking at each other. Okay? And it'll be like frozen concentrated orange juice. Everyone's going to be staring around looking at each other. and I'm going to start throwing out orders. And somewhere around the September, hang on, Fed meeting schedule 2021. Calendar, FOMC meetings. So governmental, huh? Submit. What do you mean submit? Okay, August 18th is the next meeting minutes. And then SEP. Okay, end of September. This will be the announcement of tapering. Okay. In fact, I think they'll actually start tapering. They'll announce that they've reduced their purchasing from 120 to as low as 80. You'd think 100 would be likely, but they might do it faster than that. Just say they've reduced from 120 to 80 billion. Okay. I think it'll be basically, I think what they'll announce is they'll reduce it by 20 billion a month. So in 6 months, they'll be at no quantitative easing. Okay. But that'll be the beginning. In which case, there'll be no money to be made by front running the Fed. Because the Fed won't be buying, or they won't be buying as much. And eventually there won't be any front running. So everyone will instead be short the bond market, not long. Okay? And when the market is falling, when there are investors selling the bond market, interest rates are rising. Okay? And I will take advantage of that. But what if? Cool, right? So look at that and say, oh, okay, that's why the dollar's strong. All right. So should you be selling the dollar today? No. Okay. No. Why? It's bearish. Why would you be buying euro dollar when it's bearish? Okay. We topped out here June 1st. Okay. There's been no reason to buy the euro dollar since about the beginning of June, certainly not since the Fed meeting. Okay. That's the Fed meeting. Okay. You may have tried it here, and that's fine. Okay. And maybe you tried it here. That's fine. But just understand, technically speaking, it's bearish. On says that's why you're buying bank stocks, right? Well, I started that many months ago, but yes. Cool. Look at that, huh? My oh my. Okay. My oh my. All right. Where would a bull buy if we were looking at it from over here. A bull would have bought something like this, right? And stops somewhere in here. Whoop. Because we know anything below 786 is no longer a retracement, but a reversal. That's the key. And certainly 100%, right, is definitely dog food. Okay. And the interesting thing about some of this, I think this is profit taking. Okay. And I believe this is stop losses. But it's not bears. Isn't that interesting? Now this could be a bear. Oh, for sure. That could be a bear. Okay. But notice what's going on. 2 standard deviations from the mean, 1 standard deviation from the mean, 1 standard deviation from the mean, current target here, aggressive target there. That's why they're price action pivot points. Okay. Okay. Which is very similar to linear regression. In this case, it's the high, low, and close divided by 3. Okay, over 55 hours. And that gives you a slope of a mean, and then you can calculate pivots from that. And what you'll see is market-based or traditional pivots are very similar to standard deviation. Well, use standard deviation, but they're very similar to linear regression. Okay. So that's how I got this idea of price action pivot points instead of market. And the major difference is that they're rolling. Okay. So this pivot point is based on what happened this day. Okay. Let's identify this. It looks at the open, okay, the low, and the close of the day. That's the math. It starts at this hour, ends on that hour, and we care about the high within those hours, the low within those hours, and the close, which is the sentiment weighting. That's the one thing I love about pivot points is they incorporate sentiment into your technical analysis, and sentiment is not technical. Sentiment is an emotion. I like that about pivot points. Okay. So anyways, and based on that math, it says today should look like this if you're a bull. Cool. But we know just because yesterday had vol doesn't mean today will have vol, does it? And it will not change all day. It will not change. Tomorrow will change because we have forward-looking pivots. We have leading indicators here. Most people don't have leading indicators like you and I. Okay? But we do. So tomorrow will change, but not today. Today is set in stone. So that's why I said to myself, well, wouldn't it be interesting to have similar math that updates in real time? Okay? In this case, I'm basically looking at 2 days worth of data instead of 1. I can make that change. But instead, it's using the high, low, and close on a rolling basis in over 55 hours. Okay, but I can change that. So you can go to indicators, price action pivot points, and say over the last 24 hours. So now you got, daily pivots, right? Hang on now, number lock maybe. Hang on now. There we go. So now you can have daily pivots that update constantly. Every hour you get new daily pivot points. In that case, you're right. It's pushing you bullish because it's saying this is important, and this is important. Okay. So if this is, okay, two standard deviations, this is two standard deviations. This is one standard deviation, two standard deviation, and currently we're not one or two. So we're looking at the sort of, oops, not quite there. Okay. So maybe if you're a bull, you're doing something like this. But if it turns bearish, remember, this isn't telling you anything except market conditions now, right? If you're a bear, you're actually looking farther ahead. You're not trading because it's two standard deviations below a mean. That's ridiculous. You already have a bias. So a bear already knows there's going to be selling pressure here. Why? Because that's where they're going to sell. You understand? You made a decision. You don't like the Aussie dollar. You do like the US dollar. Or you say because of the 10-year T-note yield falling, that foreigners are buying the 10-year T-note and pushing up the dollar. So you could say, well, technically speaking, using price action pivot points, okay, we over the last 24 hours, it's a little the mean or the slope of the mean is still positive, but remember, the bigger is the reasoning. Who cares about technical analysis, right? You know as a bear that this is where you want to sell. Technical analysis measures whether people are selling or not selling. Okay? So anyways, a bear is going to be doing this. Hua? And so a bear is the one that's going to change this slope. That's why looking backwards is very often not helpful at all. Okay. Look at it the bearish point of view here. Okay. And now from a bear, you can see bears have waited all day to sell here. That's the sell zone for today. What do you think a bear is doing? They see a high, then they see a breach of support. Do you think a bear is waiting to sell? Yeah. And that's the bigger thing. You see, people get so caught up in, listening to the tools, but they don't understand the tools aren't talking. Charlie says, do you think FOMC meetings will create volume? Well, a little bit, but again, I don't think there's anything there. People are now concerned about the SEP meeting, not what was talked about 2 weeks ago. But maybe, but probably not. Will it make someone dock their yacht and download it on the release and then drop $1 billion on it and then pull up anchor and go back out to sea? Probably not. Yes, for anyone that has purchased from MetaTraders, you can log back in, okay? You can log back into your account, even if you bought the indicators, I don't know, a year ago. I've updated the auto installer, and I'm going to be doing some updates, maybe even today. But there are some updates. I updated the auto installer. The auto installer is installing all new files. All the files have been gone through and tweaked and adjusted, reprogrammed. They may look exactly the same, but they're going to run more efficiently and more reliably. Some of the bugs have been fixed, but I also added new indicators. And one of them is this one. Okay, the price action pivot points. Charlie says, oh yeah, just realized, right, that you have them. Well, I've added those files. So all you have to do is log back into MetaTraders, okay? Or go there and pay the $5, okay? But I added it, so it's not in the individual download files yet, but it's in the auto installer. So if you run the auto installer, it's going to add all new files and then add a few new bonuses that I gave you for free. So maybe a year ago you bought them, but it didn't have it didn't have biased pivots. Well, I've added those for free. Okay. And then I've added now the price action pivot points for free. And fixed all the files, updated all the files, and all that kind of stuff, which, it takes a lot of work. And that was all done for free, which is another way of saying, I've lost money on your behalf. You're welcome. Okay. So Charlie, Charles must have run the auto installer. Yeah. And it'll be in your indicator list, right? So you have to go to insert indicators, custom, and then you'll see it here. Price action pivot points, for example. Zero lagging. Depends on which package, right? Most things are at the $5 package. Huh? Biased pivots is another great one. Auto Fibbo, that's a download. Channels, that's a download. The checklist is a download. Price action pivots is a download. Symbol X is a download. Money management, that's a download. Zero lag, that's a download. Watermark, that's a download. So there's a lot included. So you'll see a lot of things here. So if I go to indicators, so what's going on here? I have the watermark, the bias pivots, the channels. You see all the channels? Long, medium, and short-term channels. You see them? And the price action pivot points on that one template. Okay. But can you see here the value of the consistency that I preach? Let's go to bias pivots and say over the last 14 days of trading. Let's just have more time. Okay. I ask you to be consistent, and you're going to have to make a decision on your bias, and that's that. Okay. Or adjust when market conditions change. So let's explore a couple of ways of making that decision. Okay. In my book, I declare that this moment in time is when the market is technically bearish. How many agree with that? And in the book, you see that and you're like, that's it. It's technically bearish. Which means, how many people here have read my book? Huh? Eh? Well, I'm going to explain how to decide to be in or decide to be out. And you have to make these decisions wisely. So let me explain. Only a couple people? Yeah, all right. All right. So technically, the market is bearish at this point. These are telling you this is the bearish sell zone. 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 Okay, so this is our current live candle. You see this? This is where we are right now, right? Notice that I'm talking about this. This is tomorrow. Tomorrow, tomorrow. Okay, that's tomorrow's sell zone and target. Here's the price, 73.03 to 70. I can't quite see that. Okay, and here's the target. You see the target. The entry and the target for tomorrow is already on my chart. How amazing is that? So you make a decision here, and remember, the reason I bring this up is to say, when this happened, you already knew this. You just had to be a bear. And this is why I created bias pivot points. I used to give people pivot points, and then they just made a bloody mess out of it. Swinging both ways like a broken gate. And I'm like, what the hell are you doing? And I'm like, I don't know, I bought it because of an M2. I'm like, well, why would you buy an M2 in the down market? Oh, I don't know. I'm like, dude, son, just like George Soros said to me, son, George Soros once taught me a lesson. Okay? Make a freaking decision. So this is what I love about this indicator that I made, is you have to make a decision. Are you a bull or are you a bear? Are you a bull or are you a bear? Are you a bull or are you a bear? Love it. Make a freaking decision. That should be a t-shirt, right? Okay. Well, how do you make that decision? Well, maybe you say, well, technically, the market is bearish now. So you switch your pivots. So let's switch pivots for a second. Indicators. And you say, hey, yo, you know this kid? Okay. That you say that you're bullish. Okay, great. So you made a decision, right? Where? Here? Look at the buy zone. So you bought it. You made money. There's the target. Because remember, you're getting this a day ahead. So when you're here, you know that this is your new buy zone. Look, you bought it there. Didn't quite hit your target. That's a red flag. Okay? But it says buy it here. So you buy it there, you hit your target. Uh-oh, kind of looks like a double top. Okay? Then on this day, you buy it and you lose money. Wah, wah, wham. You should quit Forex and get into real estate. That way you can get rich quick. It's easy. You can have a jet plane and a helicopter and it's all good, even, right? Whatever, dude. You took a loss. Quit your crying. But here's the thing. You see here? What we were talking about is the market is no longer bullish. Huh. Whale oil B. So what do you do about that? You go to your indicator and say, well, I wonder if it's turned bearish. So if the market is technically bearish, let's throw on the bearish mode. And you say, okay, I'm going to put a fat marker on here to get both the bearish and the, right? But anyways. This is your bearish sell zone. Look, when you were down here, you knew to be a bear. When you were down here, it said, this is your sell zone. When you were down here, this is your sell zone. When you were way down here, it said, this is your sell zone. And then what? You took a loss. And the market turned technically bullish. So what do? You change the pivots, okay? So in this case, after a drop from 76 to 75, is it plausible the market is bearish? Well, who cares about plausible? Technically, it's bearish. So you would have your chart set to bearishness, and it said yesterday. Are you paying attention? Yesterday, my troubles seem so far away. Okay, you were here yesterday. It fell 100 pips and technically became bearish. And so yesterday you knew that a sell was at 0.7523. Oh my God. Man of many talents says, hey, Wayne, I bought your pivot platform for my Mac, but could not download it. Can I help? No, I can't help you download something. Now, I don't know anything about a Mac, even though I used to work for Mac. But I believe Trader's Way has an right? TradersWay.com. I believe they have MT4 for Mac. Now, how do you do it? How do you install it? I don't know, dude. I'm not tech support. Okay? Go to Fiverr, hire somebody. Okay? I don't know. But you can download the files and install them. And if you can't do it, then you can hire someone to download the files and install them. But it should be easy peasy lemon squeezy. But do I look like a customer service guy? That's just not me, my friend. Yeah. So I know I'm being a little facetious, but I honestly, no. Right. Okay. Just, I don't know. Maybe if you're part of the group, someone in the group will help you, but I don't know. I don't know nothing about that. Oh. If there's anything, I am the worst customer service and worst salesperson on the planet. But I love currency trading. And I love my children. I love my wife, my children, currency trading. That's about that. That's about it. Oh, I love money. I love money and I love capitalism. Love my money. But only because, I don't know, money's cool. Jordan's like, thank you. Namaste. Namaste. Thank you. Anyways, namaste. But am I making a connection here with anybody? This just sort of this breakthrough. Did I just cut through? Right? Did I cut through the wax and get to the cheese today? Was this helpful? This idea of knowing when to be long, knowing when to be short, or at least reading the market to say if you're a bull, should you be a buyer? If you're a bear, should you be a seller? Okay. Do I always use H1 when deciding a market? No. I use everything, Charlie. So what I just did was on the 1 hour. So I wouldn't say, oh man, every decision I make is on a one. No. You have to understand everything is right and nothing is better than anything else. What we see here on this time frame is a long-term downtrend. Can you see that? My charts draw the trend for me automatically. Okay. Now I think that's in the complete toolkit. That's going to cost you money. But nevertheless, there's a long-term downtrend. So is that more important than these? Well, look how slow the moving averages are. They're lagging. That's a problem. The way you beat that problem is you already are a bear. You see, Charles? That is the most important thing. Now, do you have to be a bear on this time frame? No. Okay. See, a bull now is digesting what to do. Would a bull buy a bottom if it bounced here? Yes. So are there going to be some buy orders here? Yeah. Where else would a bull consider buying? Maybe down here. And that's it. How many bulls? I don't know. Okay? And that's what bulls need to be doing. And they're not saying, "Oh, but what no." See, that doesn't exist in a professional trader's mind? They say two things. They're looking for evidence, macro data to confirm or deny the economy in Australia and China. This is definitely a China play. And they look at it and you know what? It's not good right now. It's not. What's the number one rule in real estate? How many people here know the number one rule in real estate? Right on, Johnny. Well, I'd like to be a professor one day, so boy, wouldn't that be amazing, right? Daniel says cash flow. That's not never sell. All right, Robin's got it. Mr. Kennedy partially has it. Nuno partially has it. But location, location, location. Those are the exact words that I'm looking for. Let me tell you the truth. See, location, location, location is a justification for paying too much. And for much of the time it is true, but not for every piece of real estate. Okay? If you read The Art of the Deal by Donald Trump, he tells you that that's dumb. Okay? In The Art of the Deal, Trump says the number one rule is price, price, price. Okay? You find an asset, and if you get a deal on price, meaning there's some intrinsic value that's higher than what you're paying, then you're getting value. And there'll be upside. Especially if you add value to it, now it's worth even more because you've added value, so now it's worth more, plus it was worth more when you bought it, so now you have money. Now, the Trump Tower is the example of that. When he bought the building, not the Trump Tower, the one before that, where he turned it into the Marriott. So anyways, he bought that, and it was his first real big deal, and it was in the media and everything back at the time. It was a really big deal. And the mayor was involved, and the local zoning was involved, and there was legal battles, and City Hall got involved and all that kind of stuff. And it took years to do, but he finally bought this old building, right, in a part of town that was dilapidated. There was homeless people, stores were boarded up, and it was a horrible location. Business was dead, and the owner of the building was bankrupt because, think about it, no one wanted to be in the building, no one wanted to be in the location. So he got a really good deal. He got it for cheap. And then what he did is he built a modern facade around it, right? And more good tenants started showing up because now it was a beautiful building, and the location around it got better. And therefore, the value of the property skyrocketed, right? Very, very cool. So anyways, his rule was price, price, price. So in this case, with Aussie dollar, you have to know if you're a buyer or a seller. If you're a real estate developer, you know you're a buyer. And you're looking around for good locations, but often you have to do some number crunching and you find out the price they're asking for is stupid. So you're like, well, I like the location, but this price is stupid. There's no way I can justify this price. Even like doing all the tweaks and stuff, very often people are just asking for dumb prices. Okay? Well, great. So are you a buyer of this? If the answer is yes, then the next thing is you either wait for market conditions right, evidence, or you find prices like, would you buy it at 75? Well, we've been through that story several times now. And would you buy it down here? Because these indicators are telling you right now long-term bearish, but remember, that's going to change. It's not a prediction, it's statistical analysis. Okay? But you also see here. Can't draw it, sorry. You see? It's trying to show that there's some possibility. Here's the mean price. Here's the upper bound. Okay? It is saying, well, there's some potential for up. So at what price would you buy it? Would you buy it down here? Maybe. Would you buy it over in here? Maybe. Yeah, maybe. That's what the green is. That's what the green is. Someone might buy it down there. Okay? So for example, pull this up, open your bias pivots, make it a bull. This will tell you what bulls are planning on doing tomorrow. A bull would like to buy it here. Doesn't mean they're right. But if it does this, you know for sure that they're going to try to take it to 75.5. So there's plan A for a bull, and here's plan B for a bull. But you're like, wait, Wayne, that's not a green zone here. Well, it'll be, right? Today's Wednesday. It will be on Friday. You see it? I'm thinking ahead the whole time. But what do I know about this? I knew all day that this is the price where bears will sell. This is the price where bears will sell. I'll draw them here. This is where sellers will sell. I know they're there. How do I know? Because that's what I would do if I were me. We also, if you remember the lessons from yesterday, here's price now. And I told you yesterday, bears are going to sell above and bulls are going to buy below. Okay? And I already have that on my chart. You can see this. This is where buyers will buy. This is where buyers will buy. I know the price, I just don't know the time. But someone is going to walk into New York, and say, oh, look, it's fallen all day, I should sell. Yeah, it's called bankruptcy. Good luck with that. I used to be a billionaire once. Now I'm only a millionaire. Right? Artificial happiness, huh? Some people work on artificial intelligence, or other people are working on artificial happiness, right? Cool, right? Do you guys see that no good decision is made on a technical indicator? I love technical analysis, and I'm not poo-pooing on technical analysis, but what I'm saying is if you look at the chart and the chart tells you what to do, then you add no value. And no one will ever pay you to trade for them because you don't add value. Okay? You must manipulate the chart to help you make decisions. So if you're a bear, I'll tell you what, wait for it to head around 75 and sell it. And exit around 74.5. I just made a decision. Alex says your eyes add value. Yeah, that's called confirmation bias. Okay. And it's a big part of behavioral finance. It's one of the things typically behavioral finance starts out with biases. Okay. Now, the cool thing is that you have the flaw. You have the biases. Now, you might have different biases than me, different flaws than me, but you're flawed, I'm flawed, and everybody here is flawed. And then some idiot 50 years ago said the market is rational, and they taught it at business school and econ school, and all those dum-dums learned that. But that's what happened. You know, the hippies ran the world since the 1960s, socialist pig dog hippies. And they were stoned all the time, so they believed something that stupid, that even though there's no rational human on earth, somehow the market is rational. Instead, what we need to look at is if you understand your bias, it gives you an edge over the market because the market generally doesn't understand its own bias. Okay? And so let it behave irrationally until you can get some rational opportunities. Okay? And you wait. Someday. Okay. So, the 10-year T-note. Was that helpful today to learn about yield curve analysis? Yeah, you're right, Alejandro. Probably a better way. Yeah, because Alex, are you a hippie? It's okay. I know plenty of hippies. Okay. And yield drives US dollar value because of demand, not supply. It's not right? Ah, hipster. That's cool, man. That's cool. I like hipsters. Yeah, Cash, right? Yeah. If anything, Cash, I'm not trying to say I'm right, but I am trying to clearly present a perspective. Okay? So with US dollar value, it's going to follow the yield, and the yield is dictated by price. And prices are going up, and we know that because yield is going down. Who in the heck is buying the 10-year T-note? The Fed? Anyone trying to front run the Fed, and also any foreign country that is concerned about economic conditions. Okay. And so, should you be concerned about this, or should you ask your chart to tell you what to do? Well, your chart doesn't do, it's not following price. It's not following yield. It's not following dollar demand. It's just doing gobbledygoo. It's just an algo. Okay? So, what do you think for later today? Is this going to be a buy zone? Yeah, right. Charles says, should you be counting waves or should you understand the relationship between price, yield, and dollar demand? And we're only talking about the United States here, but what about other countries? What about macro? Who is buying? That's why I'm doing that. So once again, today at 2 p.m., I'm going to do lecture 12 of the macroeconomics course. I'm going to cover financial markets. This is just a warm-up that I'm delivering free to members of FX Bootcamp that are in the live trading groups. If you're a member, I just do it for free. Then in August, I'm going to clean up, tweak, and repeat the entire course from scratch and in exchange for money. Which for everyone that's gone through the course already is probably still valuable because you're like, okay, that was so much information. I need to go over it again. Well, this would be a guided tour through the museum. The Museum of Macroeconomics. And it ain't ancient history. Okay. So anyway, so what I'm saying is if you're not in those groups, feel free to join fxbootcamp.com. So we'll do that at 2 p.m. How many people are going to be able to make it 2 p.m. for the macroeconomics course? Nobody? Maida, were you a hippie or a hipster? Yes, in the swing trading group. Yeah, in the war room. There's two groups. One is a swing trading group. One is in the live group. Yep. Yep. So 1, 2, 3, 4, 5, 6, 7, 8, Jungie 9, 10. So 10 people or any more? Maybe it'll spread the word. Thiago. Okay, cool. All right, so yeah, we'll probably have, 20 people? That's cool. That's enough, right? We'll knock it out. Constantine, yep. All right, peace on earth. May the pips be with you. May your profits be above average. See you later today or tomorrow.